A lot of the time they'll say that the tech sector is a risk sector, but I think if you step back and you think about, the tech of today is tomorrow's utility.
Hi, it's Goernert, Vice President and Senior Investment Advisor at Canaccord Genuity Wealth Management and Goernert Wealth Management. Now, welcome to the channel where we help you make sense of the financial world. Now, if you do like our content, please hit the bell and subscribe and do whatever you want. I mean, you've got free will, but hey, it really does help. So today, I'm going to be joined by Canaccord Genuity Technology Analyst Robert Young. Robert, how are you?
I'm doing well. How are you? Thanks for having me on.
Oh, always a pleasure to have you on. Now, one thing we were talking before we hit the record button here is that the tech sector continues to get bigger. And I know sometimes you've got some frustrations about, is there a rollover from technology stocks to maybe consumer staples? And you kind of make the case that would you, after this is all done, would you put your iPhone as a consumer staple or as a technology item? So why don't you take it from there? Just talk to me just about how you see the sector evolving.
Yeah, I'm a Canadian tech analyst, and so here the sector has always been small relative to our neighbors to the south. Some of the biggest companies in the world in the U.S. are technology companies, whereas up here, the tech sector has always been, small. But it's growing because we've seen a lot of companies start to go public. We've seen some good growth from companies that are public. And so the sector, is getting bigger and bigger. And so the second thing that you refer, there's a bit of a rant I've used in the past. I find that the investment community is a bit dogmatic as it relates to the tech sector. A lot of the time they'll say that the tech sector is a risk sector, but I think if you step back and you think about, the tech of today is tomorrow's utility. At one point, gasoline cars were high tech, the railroads were high tech. Fiber optic telecom deployment was high tech. Bell, Rogers, and Telus were high tech companies at one point. Now they're utilities, and so Apple is a good example. A company that maybe some people might think of as a risky tech stock, but the reality is I think most people would say that their Apple iPhone is pretty important to their day-to-day life and their work life, and they'd be hard-pressed to live without it. And so I think that saying that it is a discretionary item doesn't, fully recognize the value of some of these technology, offerings.
Well, I think that's such a good point because, coming through the pandemic where most of us we've been working from home or working remotely. On Monday of this week, I had a problem with my internet, and I had to get the guy to come back in. And honestly, I could give up food, I can give up water, anything. Need the electricity to run stuff, but internet and connectivity is key. So that your point's well taken. That said, now a couple of trends that we've seen in the sector right now. We've seen a couple of technology companies going private. Walk us through what's going on there.
Well, there's a couple of companies that I think they're disenfranchised with the valuation that they're seeing in the market, and so either the founder or the CEO sees it as an opportunity to take it private at an attractive valuation that the market's giving it today. And so there's a couple. The first one is Exfo, which is a Quebec-based company in test and measurement around telecom, and the founder, he owns 60% of the stock. And through multi-voter shares, controls over 90% of the vote. And so he has I think he's holding all the cards, essentially. And so he's made an offer to take the business private, and at $6. So the stock, went up to meet that bid, close to that bid. And so now the question is whether other interested parties might be able to talk the founder into considering their bid, because like I said, the founder has all the cards. So that's Exfo. And then the second one is a company called Dye & Durham. And there have been some, pretty public transactions in Australia, purchase of a company, there's an IPO of a company called PEXA, which is being valued at a higher level than Dye & Durham is seen in the market in Canada. And the CEO, Matt Proud, sees that as an opportunity to take the business, private and enjoy the benefit of the cash flow of the business himself, because the market doesn't value it the same way that he thinks that it should be valued. And so you're seeing this. I think what's driving it here is just there's a lot of demand for debt. Companies have a capacity to add on debt a lot more than in the past, and so there are providers of capital willing to help these founders take these companies private.
Yeah, and that's a good point because that's kind of the trickle effect of all the the free money that's out there right now. Or I don't want to say free, but we do have a lot of cash sloshing out there at very low interest rates. I mean, you've seen what's been happening on the Apple side with them being able to retire some debt and move the interest rates down that they've got over the past little bit. So that's kind of where a real world example of the overall market mechanics kind of affecting one sector. Why don't we jump on? Crypto seems to always be in the news for either for good or for ill. Usually, in my mind, for ill. But why don't we talk about what's been happening now? Bitcoin, and talk a little bit about crypto too. But walk us through how you see things playing out.
Well, I mean, Bitcoin is the one that's in people's in minds most often, and so China has some news recently where the government is limiting the ability for people to trade or clear transactions, and so that really just takes a big chunk of supply and demand out of the picture. China had already been tough on some of the mining operations, limiting their ability to operate, and so this is just another piece. And so people are looking at that and wondering if that has an impact on demand. I don't think anybody really knows what drives crypto assets. We don't have the same sort of sense of that as we do with company stocks that are reporting financials and have assets that drive cash flow. But because a lot of the crypto asset space is speculative, but right now crypto assets are in decline, and they've broken down below $30,000 US. Bitcoin has, and so that has been a bit of a level that people have been watching. And so now that it had broken down below, people are wondering now what's the next stop. And we're seeing some news, some public figures are saying that they're selling, and there's some positive stuff out there as well. I think El Salvador was in the news talking about how they're going to allow Bitcoin to be a legal tender in the country. And so there's a mix of things, but it looks like the balance is to the negative. And I would point to China as the big factor there.
Yeah,
Where it's going to go, anybody's guess.
Yeah, I've never, that's never been my bag, but it's always been interesting to watch. Now, a couple of other things to take a look at over the past little bit too. Maybe a sector that's kind of coming back now that we're starting to see sports online coming back on. Why don't we talk about online gaming, how that's going to affect it, and maybe online gambling, how it's going to play out with real sports, back and people being normal again.
There's a bunch of different ways to play this. In Canada, there's a couple of companies that provide equipment that's used directly by the broadcasters in live sports. And first one I highlight is Evertz Technologies. It's ET is the ticker. And then you've got High Vision, which is another provider of technology. And then you're seeing all over the world, really over the last even 5 years, you've seen this steady opening up of online gaming. To address that part of your question, we're seeing that in the U.S. Over the last year, where the government's become more open to allowing online gaming. There was a key legal decision on the Wire Act that opened that up, and we've seen lotteries, state lotteries, starting to roll out iLottery, and so there's some companies around that. And then you're seeing the states that are considering opening up online gaming. And as a source of funds, right now governments are looking for any source of funds that they
absolutely.
can get a hold of, and so they're probably more open to online gaming than ever before. In the U.S. particularly, it's a politically charged question because gambling of any kind is I think is frowned upon, particularly as you go farther south in the U.S. And here in Canada, we've had maybe a little bit more of an open situation for online gaming, but it's still expanding. And so that's an area that I think is over the last 5 years is steadily opening up. I think just recently there's been a little bit of excitement around iLottery because of the IPO of a company in the US called NeoGames, a company here in Canada called Pollard that work together. They've won some contracts. And people are wondering if iLottery will follow the same direction as online gaming and, catching a little bit of excitement.
Yeah, that's interesting. Now, just moving on, just a couple of more of the big brother element of technology. There was an article this week that's come out. Uh, People with thermostats in Texas have found that the utility's been, or actually in Texas the other way, they're increasing the temperature of their house to try to equalize the load. Are we going to start seeing more and more of these things? We have all these smart technology devices in our homes. Are we maybe kind of coming around to like, maybe I didn't want to install that?
Right. Well, anytime you put the internet into a piece of electronics into your home, you have to be aware of what might happen. I mean, the one before this that caught a lot of news was the baby monitors that
Yes.
had a piece of code that people could latch onto to speak through the speaker to your child through the baby monitor. I mean, and then there's also the U.S. has been cracking down on Chinese companies, particularly Chinese security camera companies, because of the potential for embedded code that does things that you don't necessarily want it to. But I mean, that's the nature of the connected device. If you're going to open that device up out to the wild of the internet, there's potential for someone to hack in and use it in ways that you don't want it to be used. And then, as far as the regulator using that, I mean, I think there's in the U.S. there's I mean, not just the U.S., but I think a lot of governments would love to be able to, manage your electricity usage remotely when they're running into situations where they have a hard time meeting demand. If they can,
Yeah.
I mean, I think in some places though, you can, sign up to a plan that allow you a lower rate if you give the government or the regulator or the utility the ability to limit your usage when they have tight or a lot of demand, like something like say your air conditioner, which maybe you don't want to run at peak time, and you give the utility the right to shut it off so that they can manage the demand. So I think there's a bunch of layers around this where there's some stuff attached to this could be very, very beneficial, and then there's the question of lots of ways that hackers can use these devices to do things that you don't want them to do.
Yeah, I think that was the case in Texas where they did sign that contract, and now they're rapidly trying to read the fine print of, whoa, did I
Right.
sign that? It's that the
Buyer's
usual
remorse.
disclaimer. Yeah, exactly. Yeah. Hey, well, why don't we wrap it up there? Thanks for joining me again. Really appreciate you spending some time. At some point, we're going to be able to be in person and be real people again. So I'm looking forward to that.
I know.
Robert Young, technology analyst, Canaccord Capital. Thank you, or Canaccord Genuity.
Thanks.
Bye.